Hey everyone, of course, thanks for joining. We're here with Jeff. Gonna be chatting general market stuff. Look,
Good
new
morning,
highs
buddy.
in some industries, but in the other side, some venture stuff slowing down. We'll chat, from tech all the way to cannabis and other industries. But Jeff, first things first, how are you?
Politics.
Politics, of course. Yeah. Well, where do we want to start? I mean, recent hype is, I guess, about these stimulus packages, infrastructure, of
Ooh,
course. They're teasing, expecting even more than teasing that more stimulus, direct to people who need them coming. What's your take?
my take is it's listen, it's a joke. I mean, you look at the stimulus package, how much it really went to the businesses that need the money, the people that need the money. Very little bit. And I think it was like 10, 12%. The other, 80, 90% is going to other endeavors. We'll call them endeavors. And then the new stimulus package that's supposedly coming out today, same thing. I mean, the infrastructure package, only about 10% is is going to go towards real infrastructure stuff. The other 90% is just going towards the usual BS. And it's the numbers have become staggering. And the fact that people are throwing around like the trillion is the old billion or 100 billion. You used to throw around the number 100 billion. That used to be a staggering number. Now you've got people like AOC that just throw numbers out there that are just, to her, they're just a number. Let's throw 5 trillion at this, 10 trillion at that, 3 trillion at that. And it's like, oh my God, you're just ruining the future of America. And it truly is, for me, dude, it is so shocking to see the amount of debt that America now carries on the books. It is unbelievably brutal.
Yeah. Well, what's your, obviously a market's kind of reacted well, both ways with interest rates expecting to slowly climb here. On the other side, a lot of people now seeing kind of the effect of potential tax rate increases. There's a big study came out of how competitive the U.S. is from a tax rate perspective. A lot of companies obviously always thinking about, oh, where do we want our headquarters to be? Tax reasons, blah 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 blah. Now, kind of, I think the US is in top 5 like highest corporate tax rates, which is insane from a competitive standpoint. Anything to touch on there, interest rates to tax rates?
No, I mean, for me, I'm just kind of kicking back. These are all things that we did speak about. I did say that when, Biden would come in, and it's no surprise. I mean, taxes are definitely going up under him. Government spending is going to inflate dramatically. At the end of the day, we're going to have a ton of inflation down the road, and down the road will, could be a couple of years down the road, but it's not going to be healthy. The bottom line is, if you look at it like a checking account, you just can't keep on printing money that just doesn't exist. And that is what the government is currently doing. I mean, before, other governments, they'd print, checks for 10 billion, 100 billion, 200 billion. Now they've multiplied that by a factor of 10, 20, 30x. It just doesn't matter anymore. Let's do this, let's do that. And eventually that dollar becomes less and less valuable. Inflation creeps into the system dramatically. And that's, that's why the markets are going up again here at the moment. Because the infrastructure bill and spending, John Deere, like all these Caterpillar, I mean, those big names will profit from it. But at the end of the day, are you really, is society, Americans in particular, are they really going to profit from all this? No, in the long run, no, not at all. And, it's just not a healthy way to look or conduct business. I mean, I could go on and on and on. You look at immigration and what's going on at the border there. I mean, that is just absolutely scary. And no one, it's so sad that the president and Harris, they're not at the border. They haven't even visited the border. And what's going on there is just brutal. And to say that, and then you look at some of these Congress people like AOC saying that it's, it has to do with climate change. It's like, oh my God, who are these people that actually think that these kids are running away from wherever they're running? And they're not even kids, half of them. They're 18-year-old adults, but they're running away because of climate change. Like, what's wrong with you? And these are the people that are running America. And that's why to them, write a check for $1 trillion or 5 or 10 trillion. Doesn't matter to them. They don't care. They don't care. I bet you AOC can't even balance a check.
So true. Well, here on the inflation kind of conversation, I'd love to ask you, obviously expecting is an understatement, expecting inflation here for the next, coming years. What would you be looking at, as of things that can benefit from inflation? And, we'll talk about things that look like are getting hurt because of inflation afterwards, but what would you be looking at?
You've definitely got to look at the good old, commodity sector, gold in particular, silver. But then you have to be careful as well on the depreciation of the dollar. So if you're carrying those assets in a foreign currency that's a good one, then you're going to protect yourself well and probably do well in terms of valuation going down the road in future, right? But if you're holding those assets in US dollars, well, that's fine. If gold's going up, it's going up, but you're not really getting the value because your dollar's going down. So the value, the buying power of US dollars actually going down. So you got to be careful on that. I'm of the viewpoint, sadly, that the US dollar is no longer, the currency of the world. I can't believe I'm actually saying that I think that the Chinese currency will be the power currency of the world, believe it or not. I thought I would never say this. As much as I think that that currency is completely manipulated, as much as the books and everything in China are completely manipulated, they're just doing a great job at manipulating everything and hiding all the real balance sheets of the economy in China. They're doing a great job. I guess they can continue playing that game of ring around the rosy over there for quite some time. So, but in the US, the books are being exposed and you're getting what you're getting. So inflation wise, gold, definitely, silver, they're going to go up. But the value of the dollar, if you're holding in US currency, you're probably going to lose on that. So
I'd love to ask you questions about kind of real estate. A lot of people, that even aren't necessarily huge stock market people, are seeing a huge boom in real estate. Here being near Toronto, of course, GTA is exploding up like 20% this year already. Insane. You're having houses that are listed for $1 million selling for 1.3, like insane numbers and selling quickly. I'm curious what your take on that is. Obviously a lot of people looking at real estate as a hedge against inflation, typically does well during high inflation years, but curious on what your overall view for real estate would be right now.
Great question, Jason. And I don't know if you're asking me that because you saw yesterday that I did a live Instagram on real estate. Did you see that or no?
No.
So funnily enough, I did with a very, very bright young entrepreneur who's now in the real estate business in Cape Town. And I did a live webinar on, valuations, real estate globally versus Cape Town, the value here. And I think I've said it to you before, and maybe on one of our earlier webinars, that the valuations here, for instance, when you look at what you can buy a beachfront home in Camps Bay, one of the nicer areas or one of the nicest areas in Cape Town, it is remarkable. I mean, you look at what you get for, I don't know, a couple $1 million in Toronto, you get nothing, zero. You get here for a couple $1 million, say it's 30, 40 million rand. Here, you're going to get an absolute palace and a lifestyle that is unbelievable. Like everything is perfect. And you think about that as a long-term investment. People before used to be afraid of a couple things and coming to Cape Town, the violence and all that. Yes, it's here, but if you go looking for it in anywhere in this world, you'll find it. But listen, if you don't look for it, you won't generally find it. You'll be okay. I mean, I've been here for a couple of years and I've been okay, knock on wood, but I don't look for trouble. I'm in bed early at night and I do my thing and I don't go to the areas where probably trouble might occur. But real estate, for instance, in different areas of the world. So Toronto has been booming. If I could short Toronto real estate, which I've been talking about for a couple of years, I've been completely wrong. I can't believe it still continues to go up, but it is. London real estate, another great example. I mean, out of control. Other areas in the world, out of control.
Well, is this the real estate market, or is that the population just growing and you're playing, how fast can the country, obviously let people in?
Well, it's a little bit of both, but by the same token, you have to have the money in order to buy those places, right? And eventually money is going to go to, valuations. So if I wanted to have, a second home, I don't need to have a second home in Florida anymore. If I live in Toronto, normally, you have your second home in Florida as an example. And you do that because you can get back to Toronto pretty quickly if you need to be, blah, blah, blah. You don't need to be, you can get back to Toronto if you needed to go to your office. Well, now we know we can work remotely. So now you kind of say to yourself, well, I don't need to buy a house in Florida for, $2 million or $3 million, my summer home or whatever you want to call it, retirement, half retirement. I can actually travel 14 hours, 12 hours around the globe and go buy a house that is 3 times nicer and 1/3 of the price in Cape Town because I can work remotely. So what is that difference really? It's just the airplane travel, it's that period of time on a plane. So I look at it in terms of real estate valuations. I mean, man, and currently I'm not looking to buy, I'm looking to rent a home. I rent one now, but I'm going to be renting again. And I'm looking around at all the properties, and it really is, Jason, if you were to see these properties, first of all, it would blow your mind. But secondly, if you saw what they cost, you'd say to yourself, oh my God, like, why am I living in Toronto? And as an example, a really nice kind of apartment for a bachelor here, right, is maybe $700-800 furnished. I mean, we haven't seen those types of prices in places like Toronto since the 1970s or 80s. It's like, huh? What's a furnished bachelor apartment in Toronto? It's got to be $3,000 a month easy.
Yeah.
Here it's like $700-800. It's like, are you kidding me? And you've got the mountains, you've got the sea, you've got beautiful culture, restaurants, like everything. So you start to say to yourself, man. And in fact, I met a Canadian in the gym the other day from Calgary who moved here. He just said, I'm done with Canada. I'm done with all the, the BS that comes along with politics and everything. I'm done with the price of real estate. I can come here, do what I do back in Calgary remotely. And he said, I live just up the road. He lives just up the road from me here. And he's got a beautiful, 1-bedroom flat in the mountains. And when I say the mountains, it's only 10 minutes up the road, but the mountains are stunning. And he's paying $600 equivalent per month. It's like, dude, $600. And, you go out for dinner here and it's only, let's say you go for a nice dinner for yourself, right? And you can't spend $15. And I'm talking a really nice dinner in a beautiful restaurant. So that lifestyle is just beautiful. And so valuations, eventually people will start to say, okay, I'm Toronto, whatever, like how much is it going to cost for that home? And what am I really getting for that? Should we start looking elsewhere? And that's what I was speaking about on the webinar yesterday. And I think people should. I think the ability to work remotely allows you to do that. There's no reason why someone shouldn't have a summer or a winter or getaway home in Cape Town just as easily. It could be in Florida or somewhere else. Yes, it's a little bit further away, but I think people should start doing that and open up their eyes to the opportunities that exist elsewhere in the world and not be so myopic in their thinking that, only everything happens in either, generally speaking, the US. There's a whole other world out there where stuff happens.
Interesting. Yeah, no, look, hey, good segue from inflation, but definitely still on point. Hey, a lot of people saying, yeah, real estate's interesting. You know, I always get questions myself, and I'm sure you do too. You know, are you scared for where real estate in a place like Toronto, New York, London, these places in 5 years from now? You know, people right now getting extremely low rates, but as they increase rates, will you see prices come back down? Will you be stuck, you know, holding this kind of massive mortgage, even though the rate's low? You
Listen, Jason, when I bought my first home back in the 1980s,
know,
uh, my mortgage rate was 21 and three quarters.
wow.
So I know what it's like to pay a lot and to accept that as being somewhat normal. I remember sharing that information with my dad and say, yeah, hey, look at this. I'm really happy I got a mortgage. And he's like, oh, that's so cool. You know, good job. And he's like, so what's your rate? And I'm like, 21 and three quarters. He almost hit the floor. He's like, are you kidding me? And but it's interesting because that particular bank from which I got my mortgage was back then called Standard Trust. So I don't know if you know way back then, but Standard Trust became one of these banks that became insolvent. So they went through a whole mortgage fiasco and everything, and it was just a nightmare. And this is exactly where I think that we're heading down the same path again, with history repeating itself in the future, where young guys, the new generation like you, Jason, they go out, the irresponsible guy goes out, not only does he buy one home, he buys two or three and tries to flip them and this and that. And, they get themselves in trouble. Mortgage rates go from wherever they are now in a 5 year to, triple wherever they are. And then people just can't afford to pay the mortgage anymore. I mean, when I got mine at 21 three quarters, how much higher could a mortgage rate go? I mean, well, in different parts of the world, we have seen them go much higher, but eventually they did come down, obviously. And for me, this mortgage rate, this whole interest rate scenario where we have been for a number of years now, a decade, it's crazy. It's irresponsible. It's not normal, and it shouldn't be at these rates, and it won't be forever. Anyone that thinks that, this is a normal interest rate environment is off the rocker.
Yeah. Well, here going on the other side of inflation, interest rates, especially. So tech obviously came down quite a bit this past month. A lot of people looking at, hey, tech is overextended, but it was overextended because borrowing money was cheap. These companies that were 5, 7, whatever years out from revenue were able to operate because interest rates were so low. Interest rates go up. You saw these companies come back quite a bit, obviously, because it's going to cost more to carry the debt. What's your take on kind of the tech sector right now?
So, I mean, I've always loved the tech sector, but it's what's driving me nuts really is that it seems to be there's a convergence between tech and social media, and I'm not liking it. I see that, when Facebook first came out, it was a tech company, you would say, with a platform based on technology. Twitter would have been the same, like all these social networks would have been the same, but now they're definitely and clearly social networking stocks. So there's a clear, division. But now what I'm seeing is politically, the tech companies and the social platforms work together, and I don't like it. And like Google and these guys, and yesterday with one of the scariest things I've seen yesterday was Facebook now telling everyone that if you're going to carry any of the position that any Trump position was during his tenure as president, if you're going to carry that position through Facebook, you will quite likely either have your account like shut down for a bit, but you will definitely get the content taken off. And it's like, are you kidding me? Like if Trump, for all the bad things that he may have done and for all the good things that he may have done, I'll just leave it at that. You're going to take history and just erase it? This guy was the president. And he like it or not, half of America, generally speaking, voted for the guy. And you're just going to Facebook say that we're going to take all that information and take it away from a platform. And considering Facebook is a publicly traded company, that is beyond scary.
Yeah.
So I look at Google, I look at Facebook, I look at Twitter. I watched Dorsey the other day talk again about stuff, and I'm like, oh my God, this is George Orwell. And it is becoming, I know I sound a little bit passionate here about it, but I really am, Jason. I'm worried about the common sense of people, generally speaking, has gone out the window. These NFTs, the tokens that are out there, the
But what's your
pieces of,
feeling on NFTs? This is a hot topic right now.
well, it is, but it's insanity. Would you pay $60 million for a piece of digital art?
See, I completely agree with you. The crazy thing is, I think there's niches for sure. I mean, that being said, I wouldn't pay $60 million for a piece of tangible art either.
Yeah. So I mean, but it's funny, like art to me, I don't really get those crazy prices sometimes. I mean, if something, I don't know, if it's a fossil of a dinosaur, T-Rex, that's from 5 million years ago, to me, that's got great value because it's probably the only T-Rex fossil you'll ever have. Like, that's got cool value. And some of the great artists, the Michelangelos, whatever, I get that. That should be worth a lot. But then you've got some of these new kind of modern artists that paint a blue, stroke of paint on a piece of canvas and they sell it for like 85 million. I'm like, I don't get that. And that's okay. I don't have to get it. Somebody else is spending their
Well,
money to
here's how I look at
buy it.
NFTs. On one side, there's the painting, and then on another side, and I know there's lots of variations, but on the other side, you're having, I mean, these like digital trading cards, moments, Top Shot, all these places, Dapper, just raised like a $2 billion valuation,
Yeah,
pretty insane. Look, obviously they're crushing it. Their platform's absolutely taking off. Makes sense. They're a leader, but incredible how fast they've grown, and companies that existed a month ago now are all of a sudden worth $100 million. Pretty insane how fast it's grown. Obviously, the space is exploding. I think I compare it, and I was talking to some people. I compared it to 2017 crypto when everyone was investing in ICOs. Because really, anyone who had Bitcoin before 2017 was all, or any crypto was also like, oh wow, I've got a ton of extra money. Let's just throw it at stuff, right? And that's kind of what you saw in 2017, at least to a degree. And it looks like that's kind of what you're seeing now
I
in
agree.
2021.
I agree with you, dude. I've said it before. You and I have spoken about it before. And I'll always, throw in the caveat. I don't know when all this shit's going to implode. But it is. It's just not making any sense. I mean, there's always going to be great stocks that people should own out there. The Buffetts of the world, the Berkshires, whatever, whatever, the JP Morgan, whatever. Those stocks will always go up and down, but over the long term, they're always going to do well, generally speaking, and they always have. So that's, one set of stocks, which are awesome. Then there's the speculative stocks. Maybe you want to buy a gold deal because they're out drilling, or an oil and gas play. That's fun. But now we're getting into these digital pieces of art, people buying and selling sneakers online for 100 grand. And I'm like, are you guys fucking nuts? Like, you can see that I'm swearing here today because I'm reading this stuff and I'm going, it's not going to end well for you people. And GameStop, up at 500, down to 50, up to 400, down to $40. It's all over the map. It's crazy, people. It's like
It's
a
gambling.
massive.
It's literally
It's a
gambling.
gambling casino out there. That's what it is. And eventually, you got to pay the piper, and it's not going to end well. And look at the other day with Credit Suisse taking a big hit with $3-4 billion hit so far, maybe on the books. It could get a lot larger with the liquidation of the hedge fund. There are so many of those so-called platforms where you're able to trade, the binary shares and all that. All that shit, I'm telling you, it's just waiting to explode, in the sense that none of it's backed up with anything.
Interesting.
Yeah. Oh, it's crazy, dude. And they say, oh no, we back it up with this, collateralized, blah, blah, blah. I'm like, yeah, dude, give me a break. It's not backed up by jack shit. You know it and I know it. It's the same old thing with nothing free. Nothing is free in this world, and yeah, everything's free trading nowadays. They come trade 1 billion shares and it's free. Like whatever, it's not free. Nothing's free. You're paying for it somehow.
Yeah.
Wake up. Like people need to wake up and give themselves a shake and say, nothing's free in this world. We all have to work hard in order to make a living and do what we do.
Agree. No, you're paying for it in some reason. Here, two points. Not so much related, obviously, to trading. So I want to do a general industry. Maybe we end with that, where things are going in your eyes. Next quarter, let's call it. But I want to chat a little bit about psychedelics, cannabis. More so because March was a big pullback month for a lot of these stocks. Obviously, a lot of them ran like crazy. And then came back a little bit. I think Canopy down 25-30%, let's say, give or take, the past month. MindMed, who we would consider one of the leaders in psychedelics, down 35-40% the past month. So what's your take on these industries? Is this just, hey, it was extremely overextended, speculative market, came back a lot? What's your take?
That's exactly it. So after the Christmas period, people rushed in, they bought all these things, which was quite frankly what I did tell people to do back in December. You and I had a beautiful interview about all that. They did. They took out all the paper that was the overhang, the supply that created the big vacuum, enabling the stocks to pop up, which attracted many, many more buyers into the marketplace. So the cannabis thing, it definitely needed this push up higher. But like any good sector, it needs always a sell-off, a good, healthy sell-off in order to form a new base, in order to get new investors in to take the stocks to higher prices. The cannabis play is a great play. It's going to work out well. The good companies will do well over time. That's a great situation. I love it. In the psychedelic space, a bunch of these stocks ran up on nothing but hot air, and they definitely deserve to be lower, and they have gotten beaten up, and that's a good thing. And they'll probably get beaten up a lot more. You and I talked about, what is the ETF at, by the way? But punch that up, Jason. I haven't even looked.
864.
So it's now below. So our last conversation, we had spoken about that. I think it was right at about $10, and it maybe went just a little bit above 10 for a tad, and now here it's at 864. I did say back then, if I could, not if I could, but I could if I wanted to, but I wouldn't. It's my industry, but and it wouldn't be appropriate to me to be, shorting an ETF against the industry. But I do think that many of the stocks that are in there, I have no idea why they're in there. They don't belong in there. They are what they are. They're just, gambling little stocks. And that's the story in the psychedelic space. Again, there are a few leaders out there that are now finally actually doing some real science. It wasn't like that a year ago. And certainly when, we got into the space 2.5 years ago, approximately, there was nobody in the space. There was us and maybe one or two others. Now there are about 9,000 others, and of the 9,000, 99% of them are the same cannabis guys that were in the cannabis sector, 5 years ago. So that's all going to happen again. And the life goes on, the game goes on for those guys. I keep on saying it. At the end of the day, this is all about drug discovery and science. This is not a kumbaya session about going to discover who you are in the middle of the woods, dropping a bunch of, acid or eating some mushrooms. Eventually, people will get that. Real science will come into play with real, doctors and scientists. And that's where we'll get soon enough.
Yeah, cool. Well, hey, we'll keep updates, I guess, going on about those industries, see what happens over the next quarter. But here, chat with me a little bit more about where you think this market's going in the next quarter. Obviously, infrastructure bill, stimulus here. So assuming we're going to make it past tax season here, you know, where do you think the market's going to be? You know, call it end of June.
You know, it's crazy to say, but I'm going to say that it's going to continue to go upward. I mean, the trend is up. As the market continues to go up, the funds have to plow in more money to rebalance. So the fuel continues to ignite itself. But at some point, people will sit back. Smart money is going to sit down and say, whoa, whoa, whoa. We got to start backdooring some stock here and getting out of our positions. But we can't let the world know. So who and how are we going to do that? That's the way it works, Jason. The big guys get together. It's like, hey, Bob, what are you doing? And whatever fund it is, they start lightening up their positions, and they might use different organizations to start backdooring, you know, positions for them. And that's the way we're going to head sooner than later. So the market will probably continue to rally for the next little bit, but it is such a, for me, it is I just see, in my opinion, the future is not rosy. I would have preferred it to be much more about, you know, here's the hard medicine for all of you. Life is not as, well, not life, but business is not as good as it may appear to be or could be or whatever. You know, we talk about the economy roaring back because people will be getting back to work and stuff. Yeah, but well, hang on a second. It's like people will be getting back to work, but they haven't been at work for a year and a half, approximately. And a lot of people not working, and, you know, their income, they owe rent on their flats for like a year. They don't have money to pay that. So there's this whole off balance sheet thing where there's just so much money owed by so many people everywhere. And because the governments have had to be lenient in not forcing people into delinquency or forcing people out of their homes or any of these types of things, that will come into play at some point. I mean, Jason, if you owned a strip mall in Toronto, and 75, I think, % of the people are not paying your rent for the last, you know, year and a half. And now all of a sudden the government's going to allow you to go recoup, you know, 50% of it. You can, you know, knock on the doors now for everybody, say, hey, you got to give me half of what you owe me. And by the way, that's, you know, whatever, you owe me 50 grand. These people don't have 50 grand to give you. They haven't been in business. So,
Yep.
so it's not a, you know, people talk about, well, the economy is going to come roaring back because, you know, people will be back in business. Like, well, hang on a second. They owe so much back money to people. It's not going to come just roaring back. You know, we went through a massive issue here with this whole COVID thing. And the economy needs to, you got to play it right. You can't fix it overnight. And that's what drives me nuts about all these politicians is they think that just by throwing massive amounts of money and stimulating the economy with these massive amounts of money, that everything will be okay. Well, that's just not the case. And that's not the way to make the economy better. You got to be way smarter than that. And you've got to direct the money to where it needs to be directed properly, not just by throwing money at everywhere and anywhere. That's not going to help. That buys votes. That's a political method of getting more votes, but it's certainly not the right way to approach the economy. So those are my thoughts on where the market's going to go. And, you know, so the market's probably going to trend higher, just to sum up, Jason. But overall, at some point, this thing's going to come down. It has to come down. It doesn't make any sense. You know, so many of these stocks are just are crazily priced, and that's it. I mean, I'm a guy that's sitting there looking at it going, at the moment, great, have fun, everyone, you know, keep on buying, selling, doing whatever. But I would not be putting money to work in the overall market at this moment.
Got it.
I think the risk is too high at this particular moment. It's better to sit back, wait for a nice pullback, and then get involved in the great stocks that will make you great money over time.
Got it. Well, hey, that's a great way to cap it off. Again, Jeff, as always, thanks so much for joining. I think this was a great little video here. Lots of good segments. So anything else you think we missed, you wanted to add in?
No, I mean, I enjoyed it. I got a little heated there, Jason, with the political stuff. I am a huge political junkie. I love to follow politics all around the world. Um, I try not to comment publicly about, my kind of thoughts and feelings. And I try to keep it somewhat general, but when it comes down to just common sense and politics, I see that as I mentioned, with high tech and social media, this is now converging, and I don't like it. I don't think that that's where the world needs to head. We need to get back to the ability to have great conversation and debate. We need to understand that it's okay to have a differing viewpoint. That's what makes a market. When I would say in the old days, I love Bell Canada, and Jason would say, I hate Bell Canada. Great, go ahead and short it. I don't get mad at you. If I want to buy the shares and own them, that's my choice. I love the company. If you want to go ahead and short it because you hate it, well, that's your prerogative. That's fine. That's what makes a market, buyers and sellers. But nowadays, we've run into this world where we don't value other people's opinions anymore. We immediately jump to a particular conclusion and throw that back in their face. And that for me is really troubling. I can't stand it. And it's scary in so many different ways where we're heading. I'm freaked out over what I see in Canada and the US
Yeah. Well,
in
great way
particular.
to end it. Look, we can do a ton of other videos. I'm sure we get a lot of questions, obviously, about this one. And yes, your passion, you just bleed, passion comes out of you. So thanks so much. But I guess we'll leave it here, see what questions come, and probably do another segment here shortly.